Hello everyone. In this session today we shall be discussing about income tax rates, about relief, about rebates, and also we will discuss about the computation of income tax liability. That means the computation of taxes, how are taxes computed. Okay, so we'll also move forward with the numericals related to that. You can see on the screen. The tax rates for the assessment year 2020-21 relevant to the previous year 2019-20. So it says tax liability of an assessee is determined after computation of total income as per the provisions of Income Tax Act and rules framed under the Act. Okay, so the rates of tax it varies every year. So what happens is the rates of income tax is not mentioned in the Income Tax Act and rules, but it is prescribed by the Finance Act passed by the Parliament every year. So every year, the Parliament passes the Finance Act and prescribes the rates at which income tax will be levied. Okay, so the rates of tax for the assessment year 2020-21, that is the current assessment year 2020-21, related to the previous year 2019-20. Okay, so what are the rates? If you see for individuals, so for any other individual born after 1957, any non-resident individual, every HUF AOP, the association of person, body of individuals, artificial juridical person below 60 years of age. So the rates are specific. It says up to 2,50,000, it's nil. From 2,50,000 1 to 5 lakh, it's 5%. 5 lakh 1 to 10 lakh, it's 20%. And above 10 lakh, the rate of income tax is 30%. For a senior citizen, okay, men or women resident in India who is of the age of 60 years or more at any time during the previous year but less than 80 years on the last day of the previous year. In that case, up to 3 lakh it is nil. On 3 lakh 1 to 5 lakh it is 5%. On 5 lakh 1 to 10 lakh it is 20%. Above 10 lakh it's 30%. These are the rates. Okay, these are the rates applicable. So next you see, from the above it appears that the taxable income is below 3 lakh. Income tax on such income is not taxable by an individual who is a senior citizen. For a resident, super or very senior citizen individual who attains the age of 80 years, in that case, okay, up to 5 lakh it's nil. On the next 5 lakh 1 to 10 lakh it's 20%, and the next 10 lakh after 10 lakh, that is how much it is, 30%. Okay, so that is the case in case of super senior citizens. A surcharge will be applicable at the rate of 10% for individuals whose income is in the range of 50 lakh to 1 crore. Okay, surcharge at the rate of 15% will be applicable in respect of individuals with income more than 1 crore. However, surcharge shall be subject to marginal relief. So surcharge applicable if somebody's income is more than 50 lakh up to 1 crore, it is 10%, and if it is more than 1 crore, then surcharge will be 15%. Now, there is another thing that is applicable. It says health and education says at the rate of 4% on income tax and surcharge. Okay, then there is a marginal relief. The minimum alternate tax (MAT) tax payable by a non-corporate assessee cannot be less than 18%, 18.5% of adjusted total income as per section 115 JC of the Income Tax Act. You remember this. Okay, that cannot be less than 18.5% of adjusted total income. So now moving forward to firms, including limited liability partnerships, the rate of tax is 30% in case of partnership firms. Health and education says the rate of 4% on income tax and surcharge. Now coming to cooperative societies, the rate of tax is up to 10,000, it's 10%. On next 10,000 to 20,000, 20%. Above 20,000, it's 30%. And a surcharge, if the net income exceeds rupees 1 crore, surcharge at the rate of 12% of income tax will be charged. However, surcharge shall be subject to marginal relief. And health and education says in case of cooperative societies, it is again 4%. So you'll have to remember here all these things. Like you'll have to make a note what are the tax rates applicable with in regard to individuals, or individuals who is less than 60 years, then individual who is more than 60 years and less than 80 years, and individuals who are more than 80 years. So you might get questions of that kind. And then tax rates applicable in case of cooperative societies. Okay, then with regard to local authorities, In case of local authorities, the tax rate of tax is 30%. And surcharge, if net income exceeds 1 crore, surcharge 12% of income tax will be charged. However, surcharge shall be subject to marginal relief. And again, health and education says it's 4%. In case of companies, if it is a domestic company whose uh, turnover or gross receipt does not exceed 250 crore, it is 25%. And where the turnover or gross receipts exceed 250 crore, it's 30%. And this is with regard to domestic companies. Now, with regard to foreign companies, in case of foreign companies, if the income is in the nature of royalty received from government of or an Indian concern in pursuance of an agreement made with the Indian concern after 31st March to the 1961, but before April 1, 1976, or fees for rendering technical services in pursuance of an agreement made after February 29, 1964, but before April 1, 1976, and where such agreement has in either case been approved by the central government. The rate of tax is 40%. In all other cases, the rate of tax for foreign companies it is 50%. And surcharge, there is also surcharge. The amount of income tax computed in accordance with the above rates or in section 11A or section 112 shall, in case of every company, be increased by a surcharge calculated in case of every domestic company at the rate of 7% of such income tax if the net income exceeds 1 crore. So if the net income of domestic company exceeds 1 crore, but it does not exceed 10 crore, surcharge will be 7%. If the net income exceeds 10 crore, surcharge will be 12%. In case of foreign companies, it will be 2% of income tax if net income exceeds 1 crore, but does not exceed 10 crore. And if it exceeds 10 crore, it is 5% in case of foreign company. And education says at the rate of 2% on income tax and surcharge, and secondary and higher education says it's 1% on income tax and surcharge in case of companies. So this is again very important question. What are the tax rates applicable in case of companies? Okay, this is another question that you will have to prepare. Now there are certain special tax rates applicable. So for short-term capital gains, we have you have already studied about capital gains. Capital gains are gains arising out of sale of capital assets. Now, if it is the period is 24 months, okay. So if it is less than 24 months, then it is short term. If it is more than 24 months, you are holding the assets. It is long term. And in case of securities, and certain other categories, it is 12 months. So if it is short term capital gain on shares, then what happens is that which is subject to securities transaction tax, then the rate of tax is 15%. If it is long term capital gain on sale of equity shares on amount exceeding rupees 1 lakh, it is 10%. And for other long term capital gains, it is how much? 20%. So these are the special rates applicable, okay, for short term and long term. So short term 15%, long term gain exceeding 1 lakh 10%, and long term not exceeding 10 lakh. In other cases, it is 20%. For casual income, say lotteries, races, crossword puzzles, it is straight away 30%. So if you are winning lotteries, then say if you are winning 1 lakh rupees, 30,000 rupees goes for tax directly. Okay, these are the special income tax rates applicable. For other short-term gains, it is included in the total income and is taxed as uh, or slab rate as applicable. Okay, so these are the special rates applicable. So you will have to remember this part also. So there is another note. So what it says, new tax rates for individuals and HOF announced by Finance Minister during Budget 2020 presentation in the Parliament on 1st February and subsequently as mentioned in the Finance Act 2020 is applicable for financial year 2021. Okay, assessment year 21-22. So every year, okay, every year. So this year also, this the finance minister has announced about different new tax rates that is not going to be applicable in the current assessment year. Current assessment year is 2020-21 and the financial year is 1920. Okay, that is the previous year. So whatever rates in the present year the finance minister has announced in the budget session of parliament, that will be applicable in the next assessment year, that is 2021 and 22. So that is something where you have to be very careful about. Okay. So next there is another concept, that is rounding off of taxable, tax payable or refundable. So what it says, income tax has amended that the total tax computed shall be rounded off to the nearest 10. You have to remember that it is to be rounded off to the nearest 10. The rounding off of tax should be done on the total tax payable or refundable and not on different subheads of taxes. Okay, so in total you will be calculating when we will do the numericals, you will be understanding it in a more detailed manner. Okay, what happens is that you will calculate the total tax as a whole, and then what you will do is that you will round it off to the nearest 10. Okay, and that is on the total tax payable or refundable, and not on any other amount. Okay, so that means the total tax will be calculated, and then it will be checked that what is the fact, what how much tax is coming. So and then it will be rounded off to the nearest 10. Okay, say there is an example also here. Okay, so see, if the total tax payable by taxpayer is 17,524.35, firstly, the paisa would be ignored and the tax would be assumed to be 17,524. And thereafter, as the last digit is less than 5, this figure would be reduced to nearest multiple of 10, that is 17,520. Okay, and say if it is 17,525.35, since it is more than 5, it will be 17,530. Okay, so that is how it is to be done, and it is rounded off to the nearest multiple of 10. Okay, so that is the concept of you can see on the screen, that is the concept of rounding off of tax payable or refundable. So now coming to the rebates and reliefs, if you see, so obviously before I move forward, I will tell you again what are the things you have to study. Obviously, this is one question: what is rounding off of tax payable or refundable? The second is what are the different tax rates applicable in regard to individuals below 60, individuals 60 to 80, individuals above 80, tax rates applicable to corporate societies, tax rates applicable to companies. So I will give you the notes also in your assignment link. I mean, give you the questions in the assignment link, but these are the questions you'll have to prepare from here. Okay, and I believe the things are very clearly given, and as I've told you, you will have to prepare on it. So now moving forward to the next part, that is rebates and reliefs. So what are rebates and relief? So the benefit of rebate is available only to resident individuals. Non-resident individuals, non-resident Indians cannot claim rebate under section 87C. So what is this rebate under section 87C? Okay, so see here it says in the year 2013-14 the government of India introduced rebate under section 87A. This rebate provides benefits from taxes payable. This benefit can be claimed when the taxable income does not exceed the prescribed limit for the relevant financial year. For the financial year 2019-20, if the taxable income is up to 5 lakh, then the SSC is not required to pay any tax by availing the benefit of rebate under section 87A. So although it says that from 2 lakh 50,000 1 to 5 lakh, there is a 5% tax, yet the government has announced a rebate on it. Okay, so that is what that is. If the taxable income is up to rupees 5 lakh, the SSC is not required to pay any tax. You have to remember this. Okay, that is up to rupees how much 5 lakh. In that case, SSC is not required to pay any tax. So what is it? If an individual's total income is up to rupees 5 lakh, then the amount of tax rebate will be 12,500, or the amount of tax payable, whichever is lower. Rebate granted under section 87A depends upon the taxes payable for the financial year 1920, assessment year 2021 as under. Tax payable less than 12,500 equal to the tax amount payable exactly, 12,500, 12,500 totally, and more than 12,500 no rebate. Okay, so on that means up to 5 lakh. Okay, so up to 5 lakh, the up to 5 lakh, if a particular person's income is up to rupees 5 lakh, in that case that particular person is getting a rebate. Okay, so that is the case. So 12,500, if you see, that means up to 2 lakh 50,000 there is no tax. So from 2 lakh 50 to 5 lakh, that is on 2 lakh 50,000, if somebody's income, say for example, is 5 lakh rupees. Okay, and as per the income tax rates for the current assessment year, up to 2 lakh 50 rupees no tax. That means on 2 lakh 50 to 5 lakh there will be 5% tax, and if you do 5% on 2 lakh 50, then it comes 12,500, and there is a rebate on 12,500, means that person, although as per the income tax rates he is liable to pay a tax, but if his income does not exceed 5 lakh, then no tax will be charged on that particular person. So meaning of total taxable income for claiming rebate, say this is total taxable income for the purpose of claiming rebate is gross total income less deduction on section 80C to 80U. Deductions, I have shared one video with you in the previous class. I believe you have gone through it. So those deductions are allowed on the gross total income, and then whatever amount comes, whatever amount is arrived at after deducting or after adjusting all the deductions under section 80C to 80U from the gross total income, that is the total taxable income. And when it comes to claiming rebate under section 87A, okay, so the total taxable income will be considered for claiming any rebate under section 87A. Okay, so again, this is one important part you will have to remember. Now, coming to the next part, that is computation of total income and tax liability of individuals and firms. This lecture is little bit going to be a little bit longer than usual because I want to cover a few important parts together here. So here comes the important part, that is computation of total income and tax liability of individuals. Okay, so see how it is done. Now in this question, if you see, net taxable income of Mr. Gopal Sharma, aged 48 years, a resident individual, for the assessment year 2021 is 4,40,000. So we are to calculate his tax liability. So now if you see what happens, he has earned 4,40,000. So you'll have to break it up. First, on first 2,50,000, there is no tax. From 2,50,000 onwards, that is from 2,50,000 one to 4,40,000. So if you calculate, it is how much? It becomes 2,50,000, it means 1,90,000. It is how much? It is 1,90,000, and 1,90,000 on 1,90,000 is the amount after 2,50,000. The rates are specific up to 2,50,000, no tax. So after 2,50,000, it is 2,50,000 one to 4,40,000. That is 1,90,000. So his total income is 4,40,000. On the first 2,50,000, no tax. On the next 1,90,000, he will be taxed at 5%, and the amount of tax comes to be 9,500. So his income tax becomes payable becomes 9,500, but the provisions again says there is a rebate up to 12,500, up to maximum 12,500. If it is more than 12,500, the balance he has to pay. But here it is less than 12,500, so entire 9,500 is going to be a rebate, and that person do not need to pay any tax. His total tax liability is nil. Okay, so we will take down this numerical in a copy. After you take it down, you'll move forward to the next one. So this is the numerical. Okay, so I hope it is clear. Very simple. This is a numerical. You'll take it down in a copy, and then you will proceed further to the next. Here what it says. See, it says that the net taxable income of Mr. Hari Sharma, a resident individual who is 66 years of age, during the previous years 1920, is 5,90,000, and tax liability you are to ascertain for the assessment year 2021. So it says how much the income is 5,90,000. That means the income slab for the first 3 lakh, it is a senior citizen, somebody who is aged more than 60 but less than 80. So up to rupees 3 lakh it is nil. Then from 3 lakh to 5 lakh it is 5%. So that means on his income is 5 lakh 90. So you have to break up into three parts. First 3 lakh, no tax. 3 lakh to 90, 2 lakhs. On this 2 lakh, 5% will be charged. So 3 lakh to 5 lakh minus 3 lakh is 2 lakh. So on this 2 lakh, he will be charged 5%, that is 10,000 rupees. And then the next slab, that is 5 lakh onwards. 5 lakh to 10 lakh, it is 20%. So 5 lakh, he has earned 5 lakh 90. That means 5 lakh to 5 lakh 90. That is 90,000. On 90,000, he will be charged at the rate of 20%. Okay, so that is how much? That is rupees 18,000. So his total taxable income falls at 28,000. Now this particular person will not be entitled to rebate. Why? Because his income is more than 5 lakh. So rebate is applicable in only those cases where the taxable income, total taxable income is, or that is the net taxable income is up to 5 lakh. If the total taxable income is more than 5 lakh, in that case, that particular person will not be entitled to any rebate. So hence he is not entitled to any rebate. So his tax liability comes up to be 28,000, and on 28,000 he has to pay health and education cess at the rate of 4%. That is 4% of 28,000. It comes up to be 1120. So hence the total tax liability is 29,120. Okay, so I hope this is clear. There is a thing. One thing is that his age is more than 60. The second one, his income is more than 5 lakh, and hence he does not get any rebate unlike the previous numerical. So again, you will take down this numerical and then we will proceed. So now let's see. This is another question. That is, this is the question here. It says net taxable income of Ms. Sujata, a resident individual who is 43 years, less than 60. Uh, During the previous year, his income is 5 lakh 30, but it is more than 5 lakh. So ascertain her tax liability for the assessment year 2021. So if you see here, so up to 2 lakh 50, no tax. 2 lakh 50 to 5 lakh, this slab 5%. That means on 2 lakh 50, 5% is 12,500. And then her income is more than 5 lakh. So 5 lakh plus 5 lakh 30 minus 5 lakh 30,000. On 30,000, that is 20%. So her tax liability comes up to be 18,500. And again here there will be no rebate. The reason is the income is more than 5 lakh. So the rule is specific. If the income is more than 5 lakh, there will be no rebate, and that particular person also has to pay an SS health and education cess of 4% on 18,500. It comes to be 740. So the total tax liability is 19,240. So that is the system. You have to remember that if the income is more than 5 lakh, there will be no rebate. If the income is less than 5 lakh, there will be a rebate. And this is how the slabs are applicable. Okay, very much similar to the previous numerical. So we will do this also in your copy. So let's take one more. Let's take one more. Okay, this is a person. Okay, the net taxable income of Mr. Mahesh, aged 58, resident individual for the assessment year 2021 is 11 lakh. So you have to ascertain his tax liability. So 11 lakh. Okay, so that means here three slabs will be coming. So 11 lakh. So we'll have to see how it is. So first, so this is an individual. He is aged 58, so less than 60. So normal rates will be applicable. So see how it is applicable. In the first 250, no tax. Then 250 to 5 lakh. This is the slab, and on 250 to 5 lakh, 5%. That is on 2 lakh 50. That is 5 lakh minus 2 lakh 50. The first 2 lakh 50, no tax. In the second 2 lakh 50 up to 5 lakh, that is 5%. That means 5% of 2 lakh 50,000. How you got it? 5 lakh minus 2 lakh 50. So 5% of 2 lakh 50,000, it is 12,500. On the next 5 lakh, that is the slab, 5 lakh to 10 lakh. That is 5 lakh. On this 5 lakh, 20%. So 20% of 5 lakh, it is 1 lakh. And then his income is 11 lakh. That is, he also goes to next slab. The next slab is more than 10 lakh. So 10 lakh to 11 lakh, that is 1 lakh. So on this 1 lakh, tax will be 30%. That is 30,000. So the total tax payable, it comes up to be 1 lakh 42,500. And then again, health and education says at the rate of 4%, it is 5,700. So hence, the total tax liability comes up to be 1,48,200. So I hope this sum is also clear to you. So that is how the different slabs are applicable. Now, hence, since this particular person has earned more than 10 lakhs, so he will have a tax liability of 1,48,200. So this is another numerical. So again, you will take down this question and the solution also, and then you will proceed further. Okay, so I have tried to put up the different cases of different phases. Okay, so this video, as I told you, is going to be a little bit long because I'm covering a lot of things. You can watch it part by part. Okay, so there is no issue with it. But all the numericals must be done in your copy, and then it must be uh, submitted as an assignment. Okay, so I will be like assigning in such a way that you will be getting attendances for 2 classes if you do the complete video. Okay, so that is how I shall be putting it up. Fine. So now see, the net taxable income of Mr. Arup Sharma, age at 82. Here, the age is how much? 82. Okay, a resident individual for the assessment year 2021. So, is how much? Is 14 lakhs. Okay, ascertain his tax liability. So, now it is a super citizen, super senior citizen. Okay, so up to 5 lakh, no tax. So on 5 lakh to 10 lakh, it is 20%. That is on 5 lakh, 20%, 1 lakh. And then again, 14 lakh is his total income. So 14 lakh on the next slab, that is again 4 lakh. Here it is 4 lakh, 14 lakh minus 10 lakh, it is 4 lakh. So on 4 lakh, it is 30%. It comes up to be 1 lakh 20,000. So if you see, the tax payable is how much? 2 lakh 20,000. So then to this you will add health and education cess at the rate of 4%. This 2 lakh 20,000, 4% of 2 lakh 20, 8,800. And the total tax liability, it comes up to be 2 lakh 28,800. Okay, so this is the next thing. So now you see, let's move forward with a numerical. You will again obviously take down this question also. This is the only case with regard to a super senior citizen. Okay, so next you see, X, aged 66 years, has earned a lottery income of 2 lakh 40 gross during the financial year 1920. He had invested an amount of 10,000 in PPF account maintained with SBI, 24,000 in National Savings Certificate. Calculate the tax payable by him for the assessment year 2020-21. So now you see how it is calculated. The net income is 2 lakh. Net income is 2 lakh 40,000. Okay, that is the gross. Okay, so a tax on net income, that is 30%. Since the income is from lottery. Okay, income is from lottery, that is 30% directly will be taxable. So he has earned a lottery of 2 lakh 40,000. So that is gross, not the net. So you'll have to deduct 72,000. 30% of 2 lakh 40, it's 72,000. That is the tax. And the tax payable now comes to be 72,000. And to this, there will be health and education cess 4% on 72,000. That is 2,880. And the total tax liability comes up to be 74,880. And deductions under section 80C are not allowed on casual incomes. So you might have studied in the previous lecture that I have shared with you, that this any investment made in PPF account, then NSC, all these deductions are available. But in case of net income, when the income is from lottery, you have to remember that such deductions will not be allowed. So this is again a short numerical with regard to calculation of tax liability of a person who has income from lottery. And income from lottery, it is given under special rates. I have already discussed just back in this session only, that it is directly 30%. Hence 30% of 2 lakh 40,000 will be charged. Okay, so we will wind up the session. We will again do this numerical, and in this session we will wind up here. There is one more numerical we will do. Okay, so but not today. So I give an assignment that we will go through this numerical. This is a complete sum where a person has income under different heads, and we'll have also do the sum, and then we'll calculate the tax liability of this particular person. Okay, so we are winding up the session here. So I hope the numericals are clear to you. This wasn't, you have to just follow them very closely. Okay, there isn't much complexity. And any confusion you have, you can ask me, okay, in another live session, or you can call me right away. Fine. So that's it for today. Thank you.